As I said, this session is going to be sponsored by Avea. We are going to have a valuable spokesperson, dear Jean-Claude Trichet, former president of European Central Bank. His speech is going to be on the future of European economy.
I am very, very happy to have been invited in Turkey. It's a real pleasure to be here and to see with your own eyes the vibrancy of the Turkish economy and the Turkish society. I had the honor on June 1st, 2007, to celebrate the 75th anniversary of the Central Bank of the Republic of Turkey. And by the way, I could say there in Ankara that it was also the celebration of the 9th anniversary of the ECB, which was founded the 1st of June 98. So a young institution celebrating an old institution, if I may, in Turkey. It was a very, very important occasion for me to praise Turkey for its remarkable success in becoming one of the most important emerging market economy and having already, of course, full participation in the G20. Since then, the G20 has become the most important informal governance grouping, taking over the G7. And we all know that Turkey has the presidency of the G20. It is a very, very important illustration of what Turkey is today. Let me also say that when we celebrated the 75th anniversary of the Central Bank, it was only a little bit less than 2 months before the start of the crisis, starting, as you remember, with the subprime crisis, and then the Lehman Brothers crisis, and then the sovereign risk crisis. It was the start of the most dramatic global financial crisis in the advanced economy since 2930. In my own understanding, it was also perhaps the worst crisis since the First World War, even worse than the 2930 crisis. Had the central banks and the governments not taken extremely bold and extremely important decisions and swift decisions. But now let me concentrate, if you permit, on this global financial crisis. Only to replace the Euro area governance and the European governance in the context of this crisis. I see 3 episodes, personally, in this global crisis. First episode coming from August 2007 up to the 15th of September 2008. This is a period where you have a general, I would say, rebalancing of markets, of financial markets. The subprime crisis has exploded, and you see that the risk premia are higher in all markets, the margins are higher, the insurance policies are different in the various marketplaces. We have a reassessment of risk, but not real drama. First episode. General reassessment of risk in the financial markets of the global of the advanced economy. Then we have Lehman Brothers collapse. And the second episode of the crisis starts. Grave and immediate threat of collapse of the financial system in the advanced economy. This is particularly dramatic. We see the various financial institutions and market falling down like a house of cards. We have to take immediate and swift and bold decisions, as I said already. This drama, a terrible depression of the kind we had to cope with in 29 is avoided, but we have a big depression, a very big depression in the advanced economy. And that is something which is, of course, extremely grave, extremely important. At the end of 2009, after several quarters of free fall of the real economy, we have the feeling that things are rebounding. Since the third quarter of 2009, we see that the economy in the US, in Europe, are bottoming out, in the UK, and the idea is, okay, we are getting out of this dramatic crisis. And it is precisely at that moment, end of 2009, beginning of 10, that you see the third episode of the crisis, which is the public sector crisis. The financial crisis of the private sector had morphed into a financial crisis of the public sector. And the big difference was that the epicenter of the two first episodes of the crisis were in the United States of America, subprime, United States, Lehman Brothers, United States, and the third episode was in Europe, and more particularly in the euro area. The best summing up of the situation I could give you was a meeting in Basel, where we meet every 2 months among central bankers, where Ben Bernanke was pointing his finger on me at the beginning of 10, telling me, Jean-Claude, now it's your turn. And he was meaning we had the responsibility of being the epicenter of the crisis until that moment. Now you have the sad privilege of having the epicenter of the crisis. And it was a very good summing up of the situation, I have to say. Now, let me say that in this perspective, the first question I will try to respond to is why is it that the euro area was at the epicenter of the sovereign risk crisis? After all, the market participants, the economic agents, the investors and savers the world over were asking themselves whether they could trust the public signature after having put into question the creditworthiness of the private signature. And they were doubtful. And you could see that even in the United States of America, the treasuries were more or less put into question. You had downgrading by Standard & Poor's. You had a number of signs that were showing that the attention of market participants was now concentrating on the public signature. But only in the euro area you had the epicenter of the crisis. And my response to the question I asked a moment ago, namely, why is it that we were at the epicenter of the crisis? I will respond with 6 reasons, if you permit me. I list the 6 reasons. First, we did not respect our own governance rule, namely the Stability and Growth Pact. For various reasons, as soon as I was myself appointed president of the ECB, the big countries in Europe decided not to apply to themselves the Stability and Growth Pact and not to accept any sanctions. And that was the case of France, of Germany, under the presidency of Italy. So you see, we did not apply seriously the spirit and the letter of the Stability and Growth Pact, the fiscal framework. To apply correctly a fiscal framework is decisive. First reason why we had the problem. First reason why we had problem in Portugal, why we had problem in Greece, you name it. Second reason, in the governance of the euro area, there was no monitoring of imbalances and monitoring of the evolution of competitiveness, relative competitiveness in the euro area. This was something which was lacking, There was too much confidence in the normal functioning of a market economy. The idea was we would see the, I would say, entrepreneurs, the real economy, the social partners taking the right and appropriate decisions if they lose competitiveness, because of course it is in the interest of the firms, in the interest of the social partners, in the interest of the workers to have appropriate competitiveness. So the correction will be spontaneous through, I would say, the competitive channel of a normal market economy. It did not function. And the absence of appropriate governance in this domain has been the second major cause, in my understanding, for the fact that we were at the epicenter of the crisis. Third reason, we had no banking union. Then, of course, in the crisis, we could see how important was the relationship, the correlation between the creditworthiness of states and the creditworthiness of the banks, for various reasons which were observed in the US, in the UK, in Europe, namely that if your economy goes very bad, of course the banks in that economy goes bad too, because the risks that they have to cope with are bad. And an additional reason in the time of this dramatic crisis was that you had the state as the overall entity that could offer protection to its banks. And by the way, as you know, in the crisis, the heads of state and government of the practically all advanced economy said, I am behind my systemic financial institution. It was said in the US, it was said in the UK, it was said in France, it was said in Germany, and so forth. So the correlation between the creditworthiness and of the state and the creditworthiness of the banks were extremely high. And that in the case, it was true in all advanced economy, and I would say also in some emerging economy. But the peculiarity of the euro area from that standpoint was that the two functioned as a vicious circle and a virtuous circle. If you had a good signature of the treasury of the country, a good signature of the country, then the backstop for the banks was credible. Then the banks had no particular problem because they had a good backstop. They had access to refinancing in a nice fashion. But in the contrary, in the countries where creditworthiness was lacking, where the state had no confidence, then the backstop did not exist really. And the banks were in an aggravated case because of the lack of credibility of their state. So you had a stretching of the euro area between the virtuous circles and the vicious circles, and of course the absence of an appropriate banking union was felt particularly dramatically in the heat of the crisis. And it aggravated the sovereign risk crisis because the burden on the states that were themselves poorly managed was augmented considerably by the burden of the banks themselves in that state. A fourth reason of this situation was that we had no ex-ante crisis management tool. We had to invent our crisis management tool on the spot. But I would say the US also had to do the same. They had to invent the TARP program in real time. You might remember that. But in the US, you have only one decision-making process because it is an achieved federation. In the case of Europe, there was no overall institution that could play that role, so you had to decide in each and every capital. And that, of course, was something which was extremely difficult. Each and every capital had to decide, and we finally had a crisis management tool which permitted to help countries in Europe, but as you might imagine, it was very, very difficult, laborious, it took time, and the absence of the European stability mechanism from the very beginning was a real problem. That was the fourth reason. There is a fifth reason, which is that the single market was not achieved and is still not achieved. And of course, in a single market with a single currency area, you need a particularly well-achieved single market because the economy has to be as supple, as active, as adaptive as possible. And without single market achieved, it is not the case. So that was an additional reason why the euro area had a particular difficulty. And a sixth reason was that the structural reforms were called for, the Lisbon program, the 2020 program, but not done at all as was required. And that, again, is something which is particularly bad for a single market with a single currency, which has to function as, flexibly as possible. And the structural reforms are precisely there to be as flexible, to make the economy as flexible as possible. So you see, those six reasons, in my own understanding, are explaining that we had, in these extraordinary circumstances, a major difficulty. Not a major difficulty for all countries in the euro area. If I count only, I would say, only three countries in the euro area had to go to the IMF and to the help coming from the European friends. Only 3 out of 15 at the moment of Lehman Brothers. 15 countries in the euro area, 3 had exceptional help. 4 had some help, these 3 countries and Spain, which was helped by the European friends to recapitalize its banks. And the other one, which were under threat, were helped more or less, but not with the mobilization of the international community or with the European institutions. So you see, when we speak of the crisis of the euro area, or the crisis of the euro, we are only speaking of a minority, fortunately, of the euro area. And a number of countries in the euro area went through the crisis quite correctly, if I may, and some even didn't see too much the crisis because they had been very well managed before the crisis, and good management is always rewarded. This is something that you are not surprised to hear from a central banker, but I have to say that it is really the experience of this recent crisis. By the way, I take advantage of this moment in my exposition to draw your attention to something which is not underlined usually, which is the resilience of the euro area and the resilience of the euro as a currency. During this terrible crisis, the worst since World War II, probably the worst crisis since World War I, as I said, a lot of observers looking at us from, I would say, the new hemisphere, from the US or from Asia, were thinking it will not hold. This is a crisis which is so dramatic. This bold enterprise of the European, the euro as a currency will disappear, and the euro area as a grouping of countries with a single currency will evaporate or will be dismantled. And you know that because you have heard all what was said at the time, you have read the papers, you have seen the articles and the Cassandras. But look at the fact. The euro did not disappear, of course. Not only that, but the euro proved a resilience during all the crises that was absolutely remarkable, to the extent that the main criticism on the euro is that it was too solid, too strong, if I may. That was the main criticism on the euro. On the euro area, at the moment of the collapse of Lehman Brothers, we were 15 countries in the euro area. At the moment I'm speaking today, we are 19 countries in the euro area. So not only the 15 countries remain in the euro area, but 4 new countries entered in the euro area: Slovakia and the 3 Baltic states. So you see, if you look pragmatically, realistically to the situation, you see that the level of resilience has been absolutely remarkable. And to understand this resilience, you have, of course, to understand that what the Europeans are doing is something which is of a historical nature, which started after World War II, and which is underlying and backing, if I may, the historical endeavor of the European. So it's not to say that those in the other hemisphere, in the new hemisphere or in Asia, that were telling us, you're too bold, you're much too bold. They were not necessarily wrong. We were bold, not too bold, but we were very bold. And a large part of the Europeans did not realize that they were really bold. But at the same time, they were also resilient and backed, as I said, by this underlying process. Now, you will tell me, okay, but where do we stand now? And what did you do in the heat of the crisis to correct the 6 weaknesses that you have listed? What is the future of Europe, both in terms of growth and job creation on the one hand, and in terms of governance on the other hand? And this is now what I will try to explain. First of all, the 6 weaknesses have found a number of important decisions. Very rapidly, the Stability and Growth Pact has been reinforced. We have now, to back the Stability and Growth Pact, the Fiscal Compact, which is a new treaty which reinforces the Stability and Growth Pact and the fiscal framework. We have the European semester, which is also something which has been created in the crisis. And we have had a reversal of the burden of the proof. I don't insist on that. This is technical, but it's very important. The Stability and Growth Pact has more teeth than the previous one. We have corrected the second weakness I mentioned, the absence of correct monitoring of absence of competitiveness and of imbalances, external imbalances in particular, with a new procedure which is called the MIP, the Macroeconomic Imbalance Procedure. Retain this acronym, MIP. It is as important as SGP. MIP should permit to avoid a particular country, member of the euro area, to diverge in terms of cost, of unit labor cost, of competitive indicators in a way which would be very dangerous. So, starting from scratch, because we had nothing, we created a second pillar for governance in the euro area. We have now the banking union, and you know what it is: centralization of banking surveillance at the level of the center, namely the ECB, creation of new institutions to cope with the resolution of banks in difficulty. All this has been created in the crisis, and it is supposed to correct the third weaknesses of the weaknesses I have already mentioned. And now you have also the European Stability Mechanism, and a treaty also was necessary to create this new institution. By the way, you see, some are saying the European cannot proceed, they will not proceed as long as a treaty is necessary. It is unthinkable that a new treaty could be decided. Still, I have listed 2 new treaties that were negotiated, signed and ratified in the crisis. 2 new treaties, the Fiscal Compact on the one hand and the ESM on the other hand. Where I am less vibrant myself, perhaps less positive, is the single market, because we have reiterated the single market, but we still have a very, very hard work to do. And on the structural reforms, my main message, I have to say permanently, for the European is do the structural reforms. Do it. It is necessary. If you want to get out of mass unemployment, you have to do it. If you want to elevate your growth potential, you have to do it. And that is something which is essential. So you see, the 4 weaknesses I have listed, and that are specific to the euro area, have their own, I would say, correction. And the 2 that are not only for the euro area, but also for the EU as a whole, the 2 last ones are for all members of the European Union, not only for the euro area. And there it seems to me that we have still a lot of very hard work to do. Now, let me say a word on the future of Europe based upon this diagnosis and based upon also on these decisions that are already done, taken, and have to be fully implemented. I would say that in terms of governance, we have to implement fully what has been decided, and in my opinion, we have to go further. And we can see clearly that going further would probably call for a more, I would say, a bolder fiscal framework that would permit the European to have at least the start of a real budget of the euro area. One could imagine several dimensions for this real budget, but the main idea would be it should be able to play a certain role of a buffer in terms of cyclical shocks in the euro area. Clearly, the absence of a significant buffer is a problem. So that's one, and we have to reflect on that, and it is what is being done at the level of the various presidents of the European institution, and they will have to make a report to the European Council rapidly. There is also another point, and I will particularly underline that point, which is the necessity to introduce an additional element of effectiveness on the one hand and of democracy in the functioning of the decision-making process of the present governance. The present governance, again, is a fiscal governance of the SGP, the macroeconomic policy governance of the MIP, and the two together are making governance which takes decision at the level of the European institutions. But you could have, from time to time, a difficulty because a particular country would say, I don't accept the recommendation that you are making to me. For instance, you are asking me to do this and that in terms of fiscal correction and adjustment. I disagree, and my own people, we disagree. That's a possibility, and we can see today, even today, that it is a possibility. And the same for the macro policies. It is true that, after all, we could do something which, of course, calls for a new arrangement, a new treaty, but which would be the following. If a country challenges the decision taken by the Commission and the Council at the center of Europe, that country, in my own proposal, could have the possibility of asking for an arbitrage by the European Parliament. So that country would say, I am in disagreement. I don't think that these recommendations are correct. I ask the European Parliament to take the final decision. Then, of course, it would be the final decision. It would be a decision that would have to be applied in the country concerned after due contact between the European Parliament and the national parliament. But I see three advantages in this procedure, which does not exist today, of course. First, it would be effective because then you would have a final decision which would be taken and would have to be implemented in the country concerned. Second, it would be democratic because the MPs elected by universal suffrage would have to decide, and that is very, very good. And then we will have also a very, very important way of having a procedure that would respect the subsidiarity principle, because it would be, subsidiarity would be respected. Only in exceptional case, you would activate what I would call a fiscal and economic federation by exception. And it is on this note of democratic accountability that I would conclude my exposition. Thank you very much for your attention.